pick your voice choice. Like, you have a choice.
I'm not sugarcoating it. It's hard. You have to find your balance to it.
Committed to learning your why and then protecting that.
It's how you do one thing is how you do everything.
Make sure you communicate what you're doing and why you're doing it and get that buy-in. And so
Grace on yourself and permission to get it wrong so you can one day get there. But there is no quick fix or instant button to get there.
Yeah, Denise didn't start her first year, even though you killed it. We talked about it yesterday. You did really well, but you didn't start doing 722 transactions.
And it was also in 2012 when rates were in the low threes, which we've never seen ever, historically ever. So it's like, after I graduated college, my first job was in aggressive phone sales. It was like boiler room. I had to make 400 dials a day. My manager listened to my recording. At the end of every day, they criticized like every little word that came out. That's like, if you say a sentence that starts with unfortunately, that doesn't land well, that's the coaching I got at the very start of selling. I won't even tell you guys what I was selling. But the point is...
Now we want to know since
you
said that.
No,
that's a big tease.
No, I was just kidding. It was like online drop shipping, wholesale. You can start a business online. So if someone was shopping for a bowling ball online, that was my lead that they wanted to start an online business. Anyways,
wow.
That's a whole nother podcast.
Yeah.
Give us your script on that.
My point is I had to develop trust and rapport really quickly on the phone. And so when I got into mortgage in 2012, rates were so low that you could call anybody in the phone book. If you don't know what a phone book is, that's another topic, but I could call anybody. It was easy. So
Little Steve Martin YouTube.
Yeah.
You should insert that right here.
But I mean, it's not that, but that's the whole thing with comparison. I did get a little bit lucky in that I started out in 2012 when rates were low. I had no call reluctance because I just worked.
You still had to make 400 calls. You're talking down your success.
I did.
You still had to make 400.
But I'm just saying, if you had to get in when rates were, let's say you got in 2015 when everybody had already just refinanced, or there's just there is a level of luck. You work hard. There's a level of luck that I got into it at a good time. I started a database right when I got into it. And so you got to work hard. Sometimes you get a little bit lucky.
I think you're being
as well.
humble. I think there was 100 of you, like there are 100 other Denises, and you outproduced them in the same opportunity, the same luck. So
I would say your team. I mean, you nailed it with the team. So going back to what you said, and you have people that are still with you today that have the same conviction that she does, which that has been watching her from the sidelines and seeing the growth of how she's been able to take her story, and now the people that she has with her now is they sell or share with the same conviction, where they all believe in the same crusade and what the nerd represents for the community, not just for the family.
I never knew about the call center stuff. How impactful was that on you? I would have loved someone to audit my calls when I first got
Isn't that crazy?
Right?
My team, when I tell them, I'm like, we need to record your calls, because hearing your calls and how you talk to people, it's so powerful.
Oh, yeah.
And I had that for 6 months. I joke about this company a lot, but had I not started there fresh out of college, I just paid my way through the best university in Texas, which is Texas A&M.
Jeez.
But I paid for it. Woo! All the Aggies.
Subjective.
Oh,
Subjective.
You really have to get that in.
Oh, yes. But I mean, I paid for it myself, no student loans. And so when I graduated, my family, my friends were like, wait, you're going to go work for a straight commissioned phone sales? Like, you didn't even need a college degree to work there. Pretty sure half the people there were felons. Totally fine. They were great salespeople. But every day we had to listen to 30 minutes of a personal development with your manager, like the group of you, of either Tony Robbins or whoever, because you were so rejected. Like, that was all part of their thing. Every day, 30 minutes personal development. And then you had to sit there and listen to your conversation with your manager and hear how many times you said, or just the little trigger words and the vocabulary that we say that we don't think trigger people, you know.
Unfortunately, that's huge. You
It
can't say that
is.
word.
It is.
That's awesome.
Yeah.
Yeah.
So
Looking back, that's like amazing training for like getting into the business or for anything really.
Yeah.
Like,
Well, what's
I don't know that I
funny
would change
is-
anything for you.
I was a teacher and I was trying to supplement my income, and she's like, you know, you should just try this. You should come here. Let's start. I lasted a day because when I'm on the phone, I try to get. I'm a talker and I love relationships, and I end up finding out like their kids' names and their DNA. And Denise was like, "Oh no, like you got to get like this is sales.
Yeah, you got 40 seconds to get their social and a 4-year
And I'm like,
commitment.
Tell me about your day."
I'm like, I don't care what their dog's name is. Let's go.
But hold on a second. You were making 400 calls a day, so you had it was a job, and people get in the mortgage business to set their own hours, and they just don't have that, in real estate, to have that conviction to work. So I got to imagine that the reason you were successful your first year as a loan officer was because you didn't work half a day, go to lunch, you know, have a drink at the dinner, and then not come back. You know, you actually worked hard. And like, what was that like when you got into business?
I was raised by a single dad. We grew up playing sports. So I'm naturally very competitive. I would say the older me is not competitive with other people. I'm competitive with myself. So it kind of started back even when I was in high school and I was working at Sonic with rollerblades. And I had this, I'm telling you, rollerblades.
Just the Denise Donoghue show, right?
Yeah, we need the
This is
B-roll.
great.
We have the B-roll
Man,
that. We pull that up.
My rollerblades were kicking, and you didn't have the card back then. So my biggest tip at Sonic was $10. I was really impressed by that. But I started putting money into a bank account, and when I got $100 in the bank account, I was like, "Ooh, I got $100 in the bank account." I mean, I was probably like 14.
Get new rollerblades.
Yeah, about to get the glow in the dark
Yeah,
ones.
Not anymore.
Yeah. But there was a little bit of competitiveness of like, how much can I get into the bank account? And then I started working at this call center, and that bank account got bigger and bigger. And then that company went under, and I was used to making so much in a month, even at a young age. And I was telling Ryan, when the company went under, I started working at Chase. And I remember when they hired me, they're like, "You're going to get a $30,000 base salary, and we're going to pay you $7 if you help somebody open a checking account." And I was like, 7.00.
Did you mean
You know,
70?
I was like,
or?
"Oh my gosh, that's so." It started with this competitive nature of kind of like when you're at the gym and you're like, "Let me put 5 more pounds on," or "Let me do 1 more minute on the treadmill." For me, it was, let me see how much money I can get in the bank account, because my parents were broke. They lost everything. And so that's kind of what started my competitiveness, is let me get in, work hard, because I wanted, in a weird way, I wanted that number to grow. And then I got obsessed with, how do I make my money work smarter? Because that's what my parents couldn't figure out. And I didn't learn that, unfortunately, at Texas A&M. I learned it the hard way, and studying, and the hard knocks way. And so that's what my drive was, is let me be competitive with myself, with my bank account. And at that time, it was, be competitive on the scoreboard. I wanted to be number one with all the other loan officers that were there. Is if they can do it, why can't I do it? I mean, I went to sales mastery and I saw all these people on stage. They were predominantly men, not to be sexist, but they were predominantly men talking about, Shayla Gifford mentions this, their success and how much money they were making. And, I think my parents total made more, like 60,000 their whole together. And I'm like, if they can do it, why can't I? So that was the drive, is I was like, I can do this.
Well, and our dad raised us to be very scrappy. So we were, delivery table surprise twins. And so he would always put us side by side. We were basically the boys he never had. And it was, he would wake us up before school. We'd have to make 50 free throws before. And then after, we were in a lot of club sports. We would do soccer afterwards. And it was she and I competing constantly. And it was so bad that when we were in high school, we couldn't even be on opposite teams guarding each other because it was blood. I mean, it didn't matter.
I love that though.
Yeah, it was like
Our
were
coach was like,
scrappy.
I love
Okay.
that competition.
We were short, and so you kind of had to be mean, and it was like blood in the water. We were
Got
gonna
some
win.
pointy elbows. Don't mess around.
Yeah. So not only competitive, but super scrappy and just willing to do whatever it took, where you have to sacrifice. And that's what people don't always see when you guys are at your level. And when I'm working with the loan officers that I am, is if that's where you want to be, you have to be willing to do what they did and what they still do to get there. And it's not easy. And although they make it look easy, and even in my little couple of years that I was originating with Denise, and I got to that point where I'm like, well, I've got 4 kids. I could do this. Like, she's just going happy hours all the time and, taking agents out. I could do this. Is easy. she made it look really easy for that systematic process of this leads coming in. And it was very humbling to go out on my own and be like, holy cow, I thought it would be a lot easier than what it is. And
It's a little bit more than golf and happy hours.
but from a production
Yeah.
partner standpoint, it can be where you create this illusion of like, oh, well, they're just on vacation, or they don't see all the behind the
That's the
scenes
illusion.
text. Yeah.
I mean, it starts with the work ethic, which I think is what you were
That was
trying
my
to pull
point.
out.
You just have to work hard. You have to get there and do it. And that's the number one
Scrappy.
thing I see when people ask me, well, how did you build a team that can do 500 loans a year consistently? I said, I worked really hard. And even when I, got to the second company I worked at, and I sat in a cubicle and I got in, early before everyone was in, and then they all went to lunch and never came back. I mean, I just worked hard, and all of a sudden they're like, oh, number 10, Todd, and then number 9. And all of a sudden I was number 1, and they were like, how did you do it? I'm like, I outworked you, right? I mean, I outworked you. I wasn't great. I had so many things I was working on. I already said I wasn't executing. I would have just done is better than perfect. But in the end, that was what I was taking away from that, is I think, you guys work so hard, right? Everyone here has worked really hard to grow where you guys have grown. And so I just always say you got to self-reflect. If you're listening to this, whether it's real estate or mortgage, are you putting in the work to get to where you're trying to go? And if you're not, then you just have to self-reflect on that.
Can you give somebody work ethic? Because I'm with Dave. Like, I see that's the biggest differentiator between top producers and bottom producers.
Well, it's mindset, right? I mean, these, it's that whole idea of, do I want to do it? But I think it's also knowing what to do, right? And I think you can build a work ethic. Maybe I'm wrong, but I think you can. I think if you know what it takes to get there, if I know I'm going to have to do 400 calls a day to be, kick ass in the call center, then I got to decide, do I want to work that hard? Do I want to do 400 calls a day? And if I only choose to do 200 a day, then I know that I'm probably at best going to be half as good as I want it to be. And I think that's where people fail in these businesses, is they don't know what they need to do to be successful. Or if they do, they're just not really truly committed to it. Like, they say, yeah, I want to do it. Oh, well, I didn't do that today. Like, oh, I should have made 40 calls and I made 35 or 30 or 20, whatever that number is. And they're just not committed to it. And I just love what you said, Deb. I wrote it down, right? If you want to get to where they are, you got to do what they did to get there. And so that's why I respect you guys so much. I think that's really what's a good takeaway.
That is a really good takeaway. And also something I just heard and thought of listening to this is you guys gamify what you're doing, and you are competing with someone outside yourself. So not comparing, but competing. And then you create your own game. And I think, that's another piece of advice I'd give to young self, is figure out how to make the things that are most important to your success fun. And how do you make things fun? You make them a game. And you look at, Win by Noon and the daily tracking, that turns things into a game. You look at when we rolled out gamification at Mortgage Coach, where it's like, hey, go from white belt to black belt to a red belt. And people, because we gamified getting better.
You guys are
giving
celebrating
advice.
it last night at dinner, talking about who's a red belt and a black belt.
Oh.
They're like still talking about it today and celebrating it.
We get calls all the time when people move companies. They're like, I don't want to lose my black belt.
Yeah, so
Dude,
smart.
what about that LO that texted you saying, what's the most TCLs
Oh.
any new LO's ever done in a year? He's not competitive.
Yeah.
Right.
So advice to everyone is figure out what you're missing that you need to do, and then gamify it for yourself, and then have someone to compete. So anyways, great takeaways.
I would say gamify it for your team too. And that does include processors.
Yeah.
So you got to
And that-
gamify it for everybody.
Crosses over to executive level too, not just at the LO level, but executive level. Like you were talking about doing 500 units, and Dave shared a stat with me. I think you had done that for over 10 years straight. So I don't know if you go back and tell your young self anything different, because you've just done nothing but crush it, Win by Noon, and 500 units. And so is there anything that you go back and tell your young self to do differently? Because
Well, like I said, I would just execute that.
perspective
I
has
think
been
I could have gotten there quicker, right? I mean, I sat down, I had a great coach, Bill Hart, and he made me write a vision out. I said I was going to be a $100 million producer. And then I set off to build it. I knew what it looked like, right? I had people in the industry who I could follow, right? You guys weren't there at the time, but I was following the other greats. But I hit a point where a lot of other people, I believed my own press. I thought I was pretty good. We were doing 400 loans a year, $80 million, and it was great income, but I had to have that self-reflection. I took the time to look at my plan and look at the year I had. And I said, gosh, that's been 3 great years, but I'm still not the $100 million producer I said I was going to be. And so I had to say, okay, well, what is it? What's missing? What can I do differently? And for me, it was saying yes, right? I said yes to everyone whenever, if you said, hey, when, can you meet me tomorrow at 9? I said, yep. You said, okay, can you meet me on Thursday at 10? I said, yep. Can you meet me on Friday at 5 o'clock? Yep. I was a yes man because I thought everyone wanted that. And what I realized was I just wasn't getting my most important priorities done. And so, when there's a clear path to grow in this business or whatever business you're in, you just have to figure that out. And so people have heard my story. I just blocked my calendar from 8:30 to 11:30 every day and made sure the things that I told everyone I did, which I did do, I just didn't do it consistently. And guess what? You do things consistently before you get distracted by everything else, right? You do one more rep and all of a sudden it happens. Your conversion rates increase, everything goes up. Because you guys were talking about it. I think you said it's a disservice if you don't use me as a realtor. I felt like it was a disservice if I didn't get your loan. I felt like you were getting bad advice, and then I had to ask myself, well, are you acting that way? Like if I'm not actually calling the lead, most people quit after one or two. Only it's like less than 20% of people make more than 2 calls to a lead. And I thought if I think I'm that good, then I got to actually do it. So then I forced myself to have a system before I got distracted to get that next call done, to go after it, because I believed in myself that if Denise was my client, that she was better served by me. And miraculously I grew my business 45% by just doing that in 1 year, and closed that's the first year we hit over 500 loans, did 551 loans, and that was it. And as I became a coach and started talking about it, most people know it's my win by noon story. Win by 11:30 didn't sound that cool, but win by noon but win by noon did. And so it's just it's not that difficult. It's just a matter of taking the time to figure it out. And for me, it's changed my life.
That's so good.
I would have won by noon faster. That was another advice to self. Really, because it was all about winning the day, winning the week, and to win the day, you have to win by noon.
Mm-hmm. From a tactical standpoint, what it just triggered a thing in my head is when I finally wrote out my own CRM, which was probably 3 or 4 years ago. I would have done this sooner, but how did I want my follow-up process to look like from a prospect? How did I want them to look like when they were pre-qualified, pre-approved, closed, funded? I wish I would have mapped that out. And this was not a fancy map. It was on Excel. I had tabs, and I was like, literally, do I want to call them? Do I want to email them? Do I want to text them 1 day later, 2 days later, 3 days later? And I did it all in Excel. And then I took that and I put it into a CRM. But had I mapped that out sooner, I think number one, it gives a very clear roadmap to your team, but it also gave a really clear roadmap to my real estate agents. That was like, I'm so intentional with my business. I've thought through each aspect of it. This is how I will handle your clients. So the realtors got confidence. But then I had confidence and clarity to speak to of this is what will happen even post-closing, because there's a lot that we do. I know like how you do post-closing, which is what I feel like is a disservice when clients don't work with us, because are you getting an annual review? Home values have appreciated like crazy. If your loan officer has not told you to check to see if you can remove PMI on your loan, that hurts my heart, literally hurts my heart. And there's so many Americans after COVID who may have lost their job or lost their bonuses or racked up credit card debt. And how are we not spewing this out from the mountaintops and on social media? And that's what drives me. It gives me goosebumps. Teach people how to manage their money. That's what we should be doing.
Budgetwithdan.com.
Yeah. Well, Deb, you said it so perfectly. It was a couple of months ago on a mortgage coach call that I was the co-host. And you said, show me. You can talk about how I say I want to help my clients come out the other side of home ownership in a better financial position. I tell everyone that. I say it a million times throughout the transaction. You're like, show me in your reviews. I want your clients to be saying that in your reviews. Show me in your annual reviews. Show me in your activities and who you are. And so budgetwithdan.com is my actions match my words, right? And I think it's so important as a mortgage professional moving forward, or if you're a young mortgage professional, you need to ace financial literacy. And that's why I love Mortgage Coach so much, because a big part of your passion is financial literacy. And we need to know that. We need to understand it. We need to know it. We need to teach it. It's on us. Teachers aren't teaching it in high school.
So how did you learn it for yourself?
Guys and gals like you, and just listening to people on social media and then following people. And then once I found how important it was for me personally, once I started tracking what was coming in every single month and what was going out, and then giving that difference a job. And I didn't learn this until about 7 years ago. I'm 46. So in my late 30s, I started to figure this out. I figured it out too late. I figured out compounded interest too late. So that would probably be my number one thing. Let me go back. Can we rewind? My number one piece of advice to the young Dan Keller was understand the rule of 72 and compounded interest, period, and abide by it, subscribe to it, period. Because it's not going to change. And it hasn't. Go back and look 20 years. Rate of return, rule of 72. Look at all the houses that we've owned, even through that 08, 09. They've gone up in value. They've doubled every 5 years, 7 years, 10 years, whatever. So same thing with money in the stock market. So I think that's so important. Being financially literate as a mortgage professional, if you're not financially literate, you can't have that confidence to be like, I'm the best choice. I'm going to take the best care of you because I understand how money works.
Well, if you don't, then you better have the lowest rate, because that's all you have to offer is lowest rate and lowest cost. And I mean, that is a disservice to Americans, to our communities. There's not enough people to teach you. Here's what's sad to me is, like our dad growing up, he only knew what he knew about finance because of his parents or his circle that he was with. And that's, a lot of people think that you have to make a lot of money to have a financial conversation with any kind of advisor, whether it's a financial advisor or a CPA. Like, I don't need a CPA unless I'm making this much money or have this business, but it's just so not true. And if you don't talk to those advisors or those types of professionals, then your knowledge level is probably going to be limited to what your parents or your circles teach you. And you'll just literally get into the retirement age only knowing that amount, unless you get outside of that bubble. And it's 2022 with YouTube around. I mean, there's just really no excuse to not be able to say, okay, if you're 25, 35, 45, you can YouTube almost anything and learn. You don't even have to have that walk-in conversation, consultation. You can YouTube it. So as a loan officer, you better be YouTubing it. Go look at Dan's website. Go look at his, but I mean, I've looked at his stuff. I've even emailed him and say, hey buddy, like,
I got snapshots of it on my phone.
Can you go ahead and send that to me?
Could you at least hire a web guy to build you out a better? I did all that on my own, by the way. I'm not a web guy. I just
done is better than perfect.
Done is better than perfect. I had to get it out there.
But to both of y'all's points, so you just said the way you built that confidence and how you learned was by people like you and with social media. And then you just gave the advice, like with our dad, that he only knew what he knew because of his circle of influence. And what did y'all do? Y'all went and you YouTubed it or you Googled. So anyone listening to this, I hope your conviction matches your destiny enough where you're willing to then share the financial truths that y'all have learned and get it on social, because that is a way for 2022 and the shift that we're coming in. It no longer matters who your circle of influence is when it's on social and you're using social for good and to educate, because someone out there needs to hear these lessons. And it's just not enough. The great advisors, I have some great mortgage coach advisors that are so good at what they do. And I'm like, why keep it a secret? Use this as a one-to-many strategy. Get that out there so that one, other people are learning from you all, like you learned, you said from Denise. But two, when people are Googling, I want them to hear from you guys. I don't want them to go, and that's what I love about what I do, is I'm connecting families to people who care about what they do and they want to give good advice. And so get your message out there and teach.
The one thing you mentioned that nobody's really said yet, that was kind of like devil's in the details of what you talked about, is you talked about them refining their styles and their business together. And I'm a big proponent of you are the company you keep. So if you're a $20 million producer wanting to be a $200 million producer, you are the company you keep. You guys, very successful tech companies, you are the company you keep. And I think it elevates each other. You guys have talked about it all day about, oh, I followed you on this. I followed you on that. So guys, you don't have to reinvent the wheel. And luckily we have amazing people that share their stories and how they got there. So seek them out. I know these people. Anybody here would take time to go, hey, let me sit down with you. Let me talk to you, and maybe not an entire day, but take a phone call or whatnot. So leverage other people in this industry. When you talked about the financial literacy piece, I think I'm becoming an old dog in the business. I used to be the young guy, but I think about changing it. Like, it's crazy to me that's not part of the NMLS to get our license. That should be. I told Dave a long time ago, I think it's one of the nicest compliments I gave him. I said, our standard's low for financial literacy. We give them an LE that is really complicated and tough to understand. I would love to change the business to where there isn't an LE, but there's a TCA. You know what I mean? Like, why isn't that? And I want to think bigger. Like, well, okay, let's actually change that. let's change the requirements to be a licensed originator to where you actually truly, like some of the questions, like you guys have got all your licenses in different states. You're just like, this is not what we do every day. And so we can change that. We can use the Ken Perrys of the world to kind of change, the testing to go, yeah, I agree with you. We should understand financial literacy at the highest level. That should be step one. Now you got your license, but it's not there yet. But maybe some of those old dogs can change it.
Most loan officers, while they may know how to, fundamentally manufacture a loan and close a loan, they really don't know how to create fiscal literacy. I mean, there are so many just small how-tos that are life-changing that I truly believe the loan officer can be the single most valuable advisor to a family, more valuable than a CPA, more valuable than a financial planner. And when it comes to a family's financial well-being and their financial freedom. So you two do an incredible job of leading by example.
So we should just start like a financial literacy. We'll create a certification. So
There
if
you
you're
go.
a loan officer with an NMLS, you want to look for the certification of the, financial school.
Maybe
And
just
then
build
it's
something.
like, yeah,
So we're gonna put when's this date?
Yeah.
You're gonna do this by.
we'll figure it
Bye.
out. We'll figure it out. But for real, you need to you need to learn. Well, even if it's not for yourself, you have to learn. If you're just pulling someone's credit and looking at their debts, and they're putting 20% down, and they have 15 grand in credit card debt, and you're not pausing and saying, "Hey, I know you want to put 20% down, but what if we did 15%? We bought out the MI and wiped out your credit card debt." That's what we're talking about by not just being an order taker, by really being the doctor and saying, I see a problem.
All right. So if you're a real estate agent and you're like, what the heck did she just say? That means you probably have the wrong loan officer. And if I was a real estate agent listening to this, I'd be asking, what is how financially literate are you? I mean, I'd be asking questions to my loan officer around this, because I think it's really important that if I'm a real estate agent, I want my clients to get the best advice, not $4,000. You brought up Ken Perry, so Ken will speak in on that one for us. Yes, exactly. But I think that's great. And I think at some point we got to get back to when we push reset, what would you say to your younger self? Because we didn't get there yet. We don't have to stop there now, but I'm not going to let you off the
And we
hook.
haven't got Deborah either.
I know. She alluded to it a little bit.
Well, I just wanted to say those who are listening that need help of where to get the knowledge for the financial literacy piece, follow Mortgage Coach, the community on the Facebook group there, and the YouTube channel. Subscribe. I did this long ago, and I would hit the little notification button, because you have the rock stars like Dan and like Denise who share their wisdom. And it's because Dave and Todd are behind the scenes making sure that they're getting the right people to just simply provide enough value where you can learn. And that's where you get your PhD in this stuff. I have not found anything else where it's real, it's raw, it's people in the trenches of
Very
how
true.
you then apply this. So you've got to get into that community. You've got to plug in,
100%
participate,
agree.
commit to commenting and asking questions. Like we do these calls twice a week. And there's a lot of people that will show up, but not always participate. And it's like, be selfish with your knowledge. You're there. If you're investing your time, you're choosing to spend your time to listen, be all in and brave enough to ask those questions that are going to help you while we have the people live. So for those struggling with financial literacy, please check out.
I learned what recasting was by watching a mortgage coach, because there was a loan officer. I'd been a loan officer for 4 years, never heard of that ever in my life. And then there was a loan officer doing an example TCA, and they said recasting, and I was like, wait, pause, rewind. What? Is that like a? And so I asked my manager, and he was like, you don't know what recasting is? I'm like, no, I've been, you know what I mean? How would I?
It wasn't on the test.
Which is a game changer in so you just learn little nuggets like that. Had I not just plugged into subscribe to the YouTube channel and, nerd and studied it. So
This is where real life comes in. Dave's got to go do a call. We're going to come back and get to Deborah's. And then also we're going to get into chapter 2 of everybody's
Ooh,
life.
all
We'll go
right.
there. So